Good afternoon, everybody. Welcome to another Creative Zone webinar. It's indeed a pleasure to see so many people connected from all parts of the world. We got a great session today, this webinar on anti-money laundering. And we have these three amazing speakers. We have Hala. Let me pull out your bio and your proper presentation so I do some formal introductions. But I met Hala a while back on another event at the Capital Club, and I saw that she has such a wealth of experience and knowledge on this topic. So Hala Boualwan, she's the CEO of Hala Boualwan consultancy firm. She has a lot of understanding on this specific topic. Malcolm Wright, he's the Chief Compliance Officer at 100X Group. And Sishan Tour, he's the General Manager of Creative Zone Tax and Accounting here in Dubai. So ladies and gentlemen, thank you so much for joining us for this webinar. So perhaps to get started, Hala, I'll address this first question to you. The UAE is positioned as one of the top 10 financial centers of the world. And with it, I believe, come to bring certain responsibilities in maintaining, I guess, the rule of law and making sure that the country stays safe as a jurisdiction for economic and business activity. So in your point of view, how far would you say has the UAE gone in achieving its status of being a safe destination of financial crimes?
Thank you, Lorenzo, and thank you everyone for attending. Absolutely. So UAE has been doing lots of groundwork, and lots of the hardship, I think, in improving the anti-money laundering frameworks and scheme and scope across the government, the public sector and private sector. There've been actually lots of initiatives between 2019 until date. So 2019, the UAE completely amended the UAE law, revamped, completely restructured it, and it's so much up to standards, international standards, and still we're seeing lots of the implementation measures for that. The UAE recently established the anti-money laundering courts, specialized courts in money laundering. Also, UAE established the Anti-Money Laundering National Council, which we've never had this before, dedicated specifically to build the strategy, implementations, trainings, and all of that. Also, they structured the National Anti-Money Laundering Terrorist Financing Committees and restructured also the subcommittees for that. And also there's dedication for focusing on anti-money laundering. We never had this before. And the Ministry of Foreign Affairs, the Ministry of Justice, the Ministry of Economy are all involved heavily in that. So you could see many ministries are working together. In addition to that, we've seen lots of new regulations which were not there before. We've seen ultimate beneficial ownership regulations. We've seen also to fight money laundering and terrorist financing. We've seen new regulations very recently on charities and non-profit organizations and how those can be part of money laundering schemes as well, and how to fight that. And very recently, we've seen new regulations from securities commodities authorities on crypto assets regulation. And I urge everyone actually to read this regulation. It's very recent. And if you want to know more about how UAE addressed crypto assets anti-money laundering, it's chapter 9 in this regulation, which is amazing. But I leave actually crypto assets to our master, Malcolm. He's going to talk in a few bits. So this is, in summary, UAE initiatives, recent initiatives, just highlights on what's going on recently to fight money laundering.
And why would you say these have been positive steps taken by the UAE government in sort of applying some of these changes?
Sorry, Lorenzo, can you repeat? Because the screen was frozen.
No problem. I was saying, why would you say these are sort of positive things or positive changes for the UAE and for the business community of the country?
That's actually an excellent question. So UAE, it's definitely positive. And I want to take it in quantitative measures, quantitatively. So UAE was recently in 2020 evaluated by the Financial Action Task Force. And there were lots of areas of improvement highlighted there. So I don't want to say it's negative, but it was areas of improvement which UAE had to address in order to be compliant with international standards to fight money laundering. And many of these initiatives like mitigate all the risks which were highlighted by the Financial Action Task Force. And this can reduce the crime rate. This can spread more awareness. There's more focus at the government level. There's more partnership at like public-private sector. Ministries are involved in everything. Like, if you have no idea, the awareness sessions they're doing, the committees, it's all to encourage whether authorities, supervisory parties, enforcement agencies, and many more. And we will talk about it in details, like exactly what was the impact on that, whether we're talking about like the UAE law or the Financial Action Task Force findings, which we're going to talk about it in a bit.
Excellent. Great. Well, Malcolm, on to you. I understand that you have a very deep understanding on what is the role that technology plays within this topic that we're discussing, the issue of cryptocurrencies and blockchain solutions. What's your take on this sort of transformation that we've seen on how countries around the world are mitigating and are trying to adapt to the realities of having to operate in a world where financial crimes exist, but on the other side, how do they use technology? What kind of tools can they use to sort of prevent and maintaining the safe rule of law?
Sure. No, thank you, Lorenzo. Firstly, I just want to say thank you, because today is actually a historic moment. Hannah and I have worked together previously at Thomson Reuters years ago. We've worked in the same space for years, and we've never yet managed to get on the same panel and speak at the same time. So congratulations to Creative Zone for making this happen. So on that note, I think the role of when we look at technology, what we are seeing is this rapid advancement. And later we might talk about, COVID. I think you mentioned it earlier, Lorenzo. But what we are seeing is this really rapid advancement in terms of technological, the way technology can transform financial services. And that's happening. Okay, we've got the big crypto piece, which we can talk about later, and blockchain. But even at the very basics, we see the transformation in, for example, identity. And what is identity? So we can start to say things like, you look at your digital identity and how you could do non-face-to-face onboarding, those kinds of things. And then we can look on the back end at the detection. So using artificial intelligence in, for example, transaction monitoring, making that far more efficient, being able to detect more financial crime with actually doing less of the manual kind of clicking false positive too many times. So there's an ability to use it in that way. And then there's from the supervisory aspect that supervisors can also use big data and technology, and they may be using that, for example, to scrape the web, looking for particular types of comments or activities or things that are being said or so on, to actually be able to supervise better the firms that are underneath their regulatory perimeter. So there's a number of different ways in which it can be used. I think one of the challenges is things are moving so fast. How does both the industry on one side, but also our policymakers keep up on the other side? How do we make sure that this technology can be utilized safely and efficiently, and we can do that in a way that won't actually cause harm to or allow for more financial crime to enter the system? And this is where technology has to be used intelligently, but at the same time there needs to be this learning that takes place with both regulators and the industry from both sides. And again, I think we can touch on the role of public-private partnerships later. If I was to look at sort of 6 areas that I saw coming a couple of years ago, and I wrote about this, I kind of did an A to E of technological advancements that we're starting to see. It's actually more like A to F, and I have cheated a little bit in this list. So the first one is automation. So actually automating a lot of the processes, and you move away from this sort of very manual effort into something that can be far more driven by an automatic workflow and that kind of thing. Then we have big data. So being able to take big data sets and then analyze those data sets and say, okay, if I put all of these, for example, customers over here, then I can see that this one's the one that's not right. This is an outlier, and we need to look at this one in more detail. So it allows for a much more intelligent understanding of financial crime. Third one was cognitive computing, which is artificial intelligence. And we start to see that the machine can make decisions. Now, as long as you can test that the machine is making good decisions, and that if it's learning, it's not learning like a naughty child, it is actually learning the right behaviors, then you can use that technology effectively to, again, reduce a lot of the noise that you get in day-to-day, anti-financial crime activities. Then we have D, which was distributed ledger, which is the blockchain. We're starting to see this emerge now through cryptocurrency, but also in tools where we need to, for example, ensure that the audit trail of something is consistent. So we are starting to see blockchain-driven KYC solutions, where you can prove that your identity hasn't changed along the way. Next one, I did cheat on, which was enhanced access as my E. So I've got A, B, C, D, E, enhanced access, and by that I mean application programming interfaces. So that's APIs. That means that one machine can talk directly to another machine without a human having to sit in between, and the two machines can talk to one another. But it also, may have heard of open banking and open banking APIs, where one bank can, you can be a customer of one bank, but you can also access from that app or that website, you can access your details on another bank account somewhere else, and so on. So it's allowing for a connectivity that didn't exist before. And again, that can actually help that connectivity can help in being able to understand risk better. And lastly is fingerprinting. And I mentioned it very, very quickly, and that is digital identity. So, being able to prove that you are, like a fingerprint is a unique version of you. How do you actually do that? And by having sort of a digital identity that is made up of many, many parts that can only be you, that then can go way beyond, for example, just holding up your passport or taking that into a branch and having it stamped or something like that.
I think we lost Lorenzo. He's dialing in probably.
He's coming back.
Yeah, he's coming back now.
Yeah.
Mentioning Malcolm, you were talking about AI, cognitive computing and systems. I was fascinating the other day. I was reading about some ability of some AI systems to predict new AML typologies, which is fascinating, predicting new typologies, which this financial institutions never had before. And when the analytics just analyze that, it's really like they are exposed to that, but they were not aware that they might be exposed to this, which is fascinating. The ability
it's a whole different world, I think, that we're moving into. It will change the role of a compliance officer. So, it's moving from data collection to data analysis. And that doesn't mean everybody in the call suddenly has to become a data scientist, but actually understanding that there's more value that can happen in your role in the future. And being ready for that, I think, is key.
Sorry, guys, I dropped for a minute. I had a connection drop there for a second. But I guess that, Malcolm, you went through your 6 points and you explained a little bit on those areas of technology. I'm still keen to explore a little bit more on the crypto side of things. I have a few questions, but I wanted to raise to Zishan you directly the topic, how does this affect the companies? I mean, as Creative Zone, we help individuals set up their businesses, and we know that we have a lot of clients on the call that they own businesses, whether they're set up on a free zone in Dubai mainland, in Abu Dhabi. What kind of compliance is it that they need to do? How is it that they need to adapt in order to comply to the new law that is being presented recently?
Okay. First of all, thank you, Lorenzo, for having me in the call as well. And thank you, participants, for joining in. So this law, as Hala also mentioned, that it has been in place since 2019, and it's been around since before that as well. It was mostly directed towards financial institutes, but now the focus has shifted to designated non-financial business professionals. Who are they? Basically, these are 4 categories that the government has announced, that brokers of real estate brokers and agents, dealers in precious metals and gems. Then there are accountants, lawyers, and internal auditors as well. And then there's the last category of corporate service providers. So now these people are also focusing, the government is focusing on these people to implement these procedures, which allows them to assess risk from a money laundering point of view, and then have procedures in place to keep on monitoring how to avoid any situation where crimes can come into the country as well. So it helps them align things on a national level. So it's very important to have these things in place for everyone in this sector. This goes to anyone who's setting up a company, or anyone who's managing bank account for someone, or providing any services to companies. And that's why it's really important that everyone assesses, first of all, their risk that they're exposed to. Then they need to apply policies, have controls in place where they get to mitigate these risks. They need to have an approach for a high risk individual or a low risk individual. Then they need to have a customer due diligence process in place where they assess for each customer that comes in, or even if it's a potential, they need to still assess whether these people might not be involved in any suspicious transactions or anything regarding any crime that might be getting facilitated through them or any other way. And then once those things are in place, then there's an ongoing monitoring, observing of how these things can be looked at, and constantly updating every company's internal policies, and updating, also training their employees to have these policies being run effectively, so that anything that gets highlighted or there's suspicion that gets raised, that gets reported to the authorities well in time, while also maintaining a level of confidence with the people. And you're not supposed to let them know that you might be raising suspicions to the government. So now they have to have a compliance officer. Each company will have to have a compliance officer, need to register on the GoML website with the authorities, central bank website. They need to be constantly checking the sanctions list, whether any of their customers are on their sanction list, and have these procedures in place, have the screening done, the world checks done for any customer that walks in or has been a customer for you for many years. And it's also important to have the senior management involved of any company to look at these policies and be able to say that we have certain policies in place and we can run comfortably for any type of situation, and constantly update these policies. That's why it's getting very important, because now the focus from the authorities has shifted to these 4 sectors. Hi, can you hear me?
Yeah, I can hear now. Sorry, I'm connected on my phone now. Something is wrong with my connection. Yeah, go ahead.
Yeah, so then to summarize these things, the obligations now for these DNFPPS is, to constantly check sanction lists and compare their client database, do pre-screening, and if there's any suspicion, if there are any people who are on these lists, you then need to freeze their assets and report them to the authorities as well. And then have any kind of reporting that's required, it needs to be immediate, and you need to have a restrictive kind of approach regarding any suspicions that get raised. So that's what's required from
where is the
point
reporting?
of law.
Where is the reporting meant to be done, Zishan? Which are the authorities or the companies? Where is it that they need to report these to?
So for now, the companies are required to have the registration done with central bank, but individually on a very ground level, these will automatically be directed through the different regulatory authorities that come into picture. So Ministry of Economy comes into place, Ministry of Justice come into place. So there are about 7 to 8 authorities that come into place for different sectors. Most of the DNFPPS are under MOE, so Ministry of Economy, and they need to have this done properly with the central bank. So first, the companies, they need to register on the Go AML website, which is under central bank. And there is a deadline for that, and that's 31st March for now. And this has been extended from the last deadline that was in Feb. So that's why it's very important for everyone who qualifies under this law to have themselves registered as soon as possible.
Excellent. Good, good. Thank you, Zishan, for that. So Hala, going back to you, tell us a little bit more about what it is that you do with your consultancy firm. How is it that you help corporations to sort of align themselves to some of these new policies that have been introduced?
Thank you, Lorenzo. So first, thank you, Zishan. I just want to add to what Zishan was saying. It's very thorough, and thank you for that. And this is in line with your question, Lorenzo, how we help institutions. And I think many of similar consultants do the same when we're passionate towards anti-money laundering. And that's what Malcolm does as well. We make sure that the local and the international standards are implemented within the region we're working on. And in addition to what Zishan was saying, the new law, which, for example, in the UAE, we're talking about now UAE, the new law has identified lots of the international standards, which were recommended by the intergovernmental party, which is Financial Action Task Force, which is the main responsibility of FAT, the Financial Action Task Force, is to set the standards to fight money laundering, terrorist financing, and now actually financial crimes as a whole, which I don't like to differentiate them because we'll talk about it later about the financial crimes world. But so how we help the institutions is to make sure they apply the right regulation and the right Financial Action Task Force regulations. And in addition to what Zishan mentioned, the designated non-financial businesses and professions, which is amazing, we do that. In addition to that, the new regulation highlighted many new areas which were not in the previous regulations. For example, when we talk about funds and when we track funds or trace funds, usually it was the traditional funds. Now it includes electronic and digital assets. This is part of the regulation. It wasn't there. Also, there's, for example, now the law explicitly mentioned that we can have something undercover crime where they allow certain money laundering crimes in order to capture the real gangs, for example, the real thing, to trace it. So now it's allowed. So sometimes authorities might work with institutions in order to do that. So sometimes we do this as well to facilitate this thing. Also, financial, like FIUs, where the units which are responsible to receive those reporting requirements and do the investigation, all of that here in the UAE, they don't allow anything except electronic submissions. Before, it used to be sometimes emails or all of that. Now there are systems for that. Also, reporting obligations, as Zishan mentioned, ministries are very involved, central bank. Also, for example, if you are regulated by the DFSA, you have to report to the DFSA authorities as well. They have special unit, AML unit, terrorist financing unit, ADGM, same thing. In addition to the central bank, of course, and MOE, for example, Minister of Economy now, they are responsible for the designated non-financial business and professions. So also when this is related to DNFBPs, you have to also report to Ministry of Economy. In addition to that, the new regulation highlighted the PEPs, which are the politically exposed persons. Before, it used to mention only the foreign PEPs, and it said, and now there's foreign PEPs, there's local PEPs, and now foreign PEPs, they're automatically high risk. So when you do your risk-based approach as an organization, foreign PEPs are automatically high risk. Local PEPs are not automatically high risk unless they expose certain high risk, whether they're business, whether anything. Also, the new regulation, they were very persistent on several areas, how the government has to have international cooperation with other governments, enforcement agencies, and all of that, which wasn't there before. There was but it was shy initiatives. Now, you could see, it's more than that. Also, when it comes to correspondent banking, and international transactions. Also, the new regulation highlighted further and stricter due diligence when you want to deal with correspondent banks, specifically in certain high-risk countries as well. Also, when the previous laws, when they used to mention products, when you want to do due diligence on certain products, it didn't explicitly mention technology as a product or service. So now technology is like, it's like inseparable. In addition to that, and this is very, very important, is the risk-based approach. Also, when we do a risk-based approach, it's different. It should be also stricter. So when you onboard clients, or when you onboard suppliers, or you even hire employees, so KYE, know your employee, KYS or 3P, know your supplier or third party, or KYC, which is know your customers, you have to apply a very strict risk-based approach, categorizing them by high, medium, low. And the higher risk, the more due diligence you should do, the more frequent update of KYC and more documentation, more proof of concept and all of that. So in addition to that, every organization has to have an AML risk assessment. So it's not only you apply to your customers, you apply on yourself, on the company. So every business unit within any organization has to do risk assessment. And when they do risk assessment, they assess the skills they have within the institution, within this unit, to mitigate financial crimes and money laundering, what kind of services they offer, what kind of risk this exposed them, who are their clients. So if I'm HR, for example, my client are the employees. So I have to do also a risk assessment on the employees. If I'm procurement, my clients are suppliers. So I have to do on suppliers. If I'm the relationship manager, my client are the clients. So depending like which unit you are in, so you have to categorize the countries you're dealing with, the people, the skills you have, the kind of services you offer, what kind of policies and procedures you have in place. Is it applicable? Do you have the right technology, as Malcolm actually detailed? Is it efficient to what you offer? All of that. And finally, the new regulation is it's very strict about that. It's been always there, but they've never been that strict, is to apply the recent sanctions, like to keep yourself updated with sanctions, not only OFAC, Office of Foreign Asset Control, it's also FATF watch lists, it's also United Nations Security Council as well sanctions, which like it's very important as well to the UAE. So this is just in brief the new regulation and how can institutions, whether my institution or institutions similar, help organization, direct them to apply with the new UAE law. Excellent.
Thank you so much for that, Hala. There's a lot of good information there. Malcolm, back to you. I mean, and also at this time, maybe I would like to encourage everybody on the audience, the attendees, to start sending your questions. We have quite a few good questions here on the Q&A section or in the chat section. I'll be reading a few. But before I start reading a few questions, Malcolm, at the beginning of the chat, you brought an important point that was, how is it that the regulators can work together with the industry and the financial services industry to mitigate the financial crime exposure? You're on mute, Malcolm.
There we go. That's got to be one of the most common phrases on Zoom these days. You're on mute. Can you hear me? Okay, right. So yes, the best example I think I can give is what we've been doing in crypto for the last 2 years. So back in 2018, early 2019, the Financial Action Task Force, the FATF, started to introduce their recommendation updates for crypto assets. I was part of a group called Global Digital Finance, and we're an industry body for crypto firms, and we issued a response to the FATF. And that then started a dialogue. So we then started to talk about the recommendations came into force in June 2019, and shortly afterwards we held a meeting called the V20, which we held in Osaka, and we invited the FATF to come and talk. At that meeting, they also then said, right, we're establishing a virtual assets contact group, and that had one member from each FATF, or members from each FATF country, who would engage with the industry. So we then had regular dialogues every couple of months where we would present how we're progressing with our being able to put in place the appropriate controls and systems and everything that we need to do for good AML. And on the other side, we would ask questions about, what does this regulation mean, or the recommendations mean? How is it being implemented? And we would give suggestions and feedback, like it would be good if it was harmonized regulation, and we need more clarity on these points, and so on. So we started this two-way dialogue. That then started to go down to country level. And, I can give examples such as in Singapore with MAS, who reached out to the industry. They worked closely with a local Singaporean blockchain group called Access, and a couple of others as well, to solicit feedback. So there's a bidirectional conversation that takes place about, okay, on the one hand, you have the industry that really needs to understand regulation, but they can also inform regulators on what it is they're trying to regulate. So there's this brand new technology, it's moving at 1 million miles an hour. How do we actually make sense of this and upskill on both sides? So the tech firms learning how to do compliance, and the regulators learning about the tech that needs to be put in place. That leads to a win-win for both sides, because ultimately we are all fighting the same battle. We want to prevent financial crime and the related activities. And to do that, we have to work together. So why would we sit on different sides if we can actually come up with the same answer together and do it in a way that promotes innovation? It promotes, new technology from really gaining ground. And on the other hand, we have a regulatory fit that is best practice that will ensure that the industry can flourish, but preventing financial crime, and the two groups work together on this. I think that can lead to really strong outcomes. So we're continuing with those dialogues. We still have engagement with the FATF. In fact, the FATF have a consultation coming in a couple of weeks on crypto. Those kinds of things are still going on. We still respond to regulatory consultations. We still engage with regulators and having regulatory forums. We had another V20 just before Christmas, and we had 5 regulators, including Abu Dhabi, who presented their crypto asset approach. And it was a great dialogue to get both sides working together really closely. And I think that as we move forward into a rapidly changing world, if you look at the advancement in the last 3 years compared to the last 20 or so, it's vastly different. And it's just going to continue on this vein. So we need to actually work closely. We need to have regulation that is adaptive and can be pivoted quite quickly to whatever the need is. We have the need of the industry to be able to say, hey, we've got this new technology, let's talk about it and how we believe it can be made safe. How do we do that? And we can only do that if we're working together.
Has crypto made it a little bit more difficult for entities and authorities to trace the source of funds? I'm very small familiar with dealing with exchanges on the way that you can move crypto from one platform to another and then easily pulling that back into my bank account, and then the bank goes, well, how did you suddenly become a holder of 20 bitcoins?
There are tools out there, so it's becoming, as we see more of the FATF recommendations applied into national legislation, then it means that the exchanges, which are really your on and off ramps between fiat currency and crypto, as they become regulated, then it means that we know who is actually transacting. And if we know who is transacting, we also have other tools on the majority of crypto coins. We can look at the transaction history. So we can say, okay, we can see where this has come from. This has come from dark web. This has come from trading or investment. You bought 1 Bitcoin in 2015, and all of a sudden, you've got 10 times your money or whatever, and you might want to cash that out. And you can demonstrate that. Right. And if we have the appropriate KYC in place and the appropriate controls around AML and transaction monitoring, and this new tool called blockchain analytics, which allows you to look at that history. Imagine being able to trace, a banknote from where, which hands it's passed to. That's the kind of analogy that you could say, yeah, I passed it to you and they passed it to them and so on. Being able to do that makes it actually far more effective in the fight against financial crime when it's applied correctly. So I think that the world is changing with that. And as the exchanges and custody providers get regulated and start to lift and elevate their standards of good KYC, then we'll start to see that the amount of financial crime that cryptocurrency can be used for will diminish. And we are actually starting to see that. So there were a couple of reports that came out actually in the last couple of weeks, one from a firm called Chainalysis, another one from a firm called CipherTrace. And both of them pointed towards illicit use of cryptocurrency, particularly in this case, Bitcoin, is decreasing. And I think that falls in line with increased regulation, increased scrutiny, exchanges now starting to say, we need to operate to this new standard.
Yeah, excellent.
And
Great.
sorry,
Well,
just to add
Yes,
to that,
Hala?
just
Yeah.
to add to that, for whomever resides in the UAE, further to what Malcolm was saying, as we mentioned, that Securities Commodities Authority issued an amazing regulation called Crypto Assets Regulation. So if you are a customer, you want to deal with crypto assets, or you are a service provider, you want to know how to be compliant, how to set that, how to have the right anti-financial crimes, to be compliant with international and local regulations. I urge everyone to read that if you are a startup or if you are a customer and you want to know what kind of due diligence will be done on you if you want to deal in this. So it's chapter 9 in this regulation, if you don't want to read the whole regulation.
Maybe we will, after the webinar, we're going to send the link of this regulation to everybody attending. Hala, thank you for bringing this up.
Sure.
Good, good. All right, well, I think it's time for us to start bringing a few questions from the audience. I'm going to start reading a few of them. Maybe Sishan, the first one could be addressed to you. It says, is the Dubai DED mainland company trade license with activity of management consultancy required to register on the Go AML anti-money laundering platform?
So the first thing that we would need to do is try to assess what your activities are. It's not just what's listed on the trade license that you need to look at. It goes a little bit beyond on looking at what the substance is. For you to be qualified as one of the DNFBS, you need to see what you actually do in that. Like, for example, if you are managing or consulting on behalf of someone's funds, then you would have access to their funds or know where their funds come from. So it might be likely that you might need to register. So it goes beyond what's listed on your trade license, and it needs to be looked at, on a parallel basis with what's in the law. The government has clearly mentioned that if you do 1, 2, 3, 4, then you're qualified. And that's where we can help you and see if your operations or what you do, your individual activities are covered within any of those, then yes, you would have to register through the GoML system.
Excellent, excellent. Hala, maybe this question would be for you. It says, how can we convince UAE companies to comply with AML while we can assume it will impact negatively their business?
That's actually a good question. And I think this is the common understanding of like anti-money laundering and compliance. Usually people perceive it as additional cost in their business, and many don't see the real value in setting compliance measures and anti-money laundering. Definitely it will not impact their business. On the contrary, definitely it will not impact their business negatively. It will impact their business positively. Because by having the right AML measures, you're making sure you're proactive in order not to expose your company to any risk it might be exposed to. You're prepared even in case, God forbid, something happen, a breach, you know what to do, you know where to go, you know whom to report to. So I urge everyone not to think this way. On the contrary, you should have AML. AML is like drinking water, is very essential for any company. AML measures and compliance are actually the core thing of whenever you're thinking to set up a company, think of that before.
There's another good question, maybe for Hala also. He says, can one person be a compliance officer for 2 different entities?
Actually, there isn't anything in the law which clearly said you cannot. However, there should be like when you do that, first, if, for example, you're both companies, so it has different angles. If both companies, for example, are regulated by the DFSA, let's just give an example, by Dubai Financial Services Authority. First, definitely, if you want to be compliance officer, you have to be authorized by the DFSA. So they do their due diligence to see. One of the main things they see is the conflict of interest. You shouldn't have conflict of interest between your job here and your job there. If, for example, one of the companies is in the DFSA, one of the companies is regulated by ESCA, completely different authorities, you should notify the authorities and they'll analyze if there be conflict of interest. However, this thing happens a lot. Specifically now, the law allows outsourcing. So in many cases, the consultant can be compliance officer to several. There isn't anything which stops that. But conflict of interest is the main thing which regulators look at, you know.
Excellent. Maybe Malcolm, this question I can address to you. It says, there are ambiguities with regards to the activities listed which Go AML registration is mandatory for. Would you, who would be the right authority to clarify such ambiguities and confirm if a company should register for Go AML or not?
I might go to Zishan, actually. I'm going to defer to Zishan or Hala on that one.
Sure. So in the law, it's clearly mentioned that if you prepare, conduct, or execute financial transactions for clients and do 1, 2, 3, 4, then you need to get yourself registered, have the proper policies in place. And that's something that you need to go to the law and compare. What happens right now is clients or anyone doing a business would want a yes or no answer, whether they do or they do not qualify under the law. So the law is a little bit extensive. It covers 3-4 different laws and brings it all together. So that's why it gets a little bit complex and complicated. So it's mentioned in the law. Yes, it's mentioned clearly in the law that if you do these things, then you fall within the law.
Excellent. Yeah, it's true, Malcolm. There's a lot of very technical questions coming through. It's all about activities and other sort of more technical questions. Let me pull a couple more. Well, Hala, somebody's asking if you would have a PPT presentation or some other documents that we can put forward to the attendees. We will collect a few good documents out of this session from the panelists. Malcolm himself has written many articles on the topic. We'll put together a good document and we'll send out links and documents for everybody. While I keep on looking for a few other questions, Malcolm, you might have some other points that you would like to bring to the attention of our audience. What other topics would you like to mention as I scroll through some of the questions?
Yeah, I think the theme I think here has been we're looking at a broader financial crime. I've kind of touched on crypto a little bit and what's happening there, and we're seeing advancements. I know there's a question there I could see in there that was looking at confusion about which regulations apply to different firms, and that's actually something that actually applies in the crypto sector as well. That it's not necessarily clear because each country is different, but also each activity can be different as well. So crypto is a big, broad umbrella, but there's a lot of things that can fall inside that mean that you could end up needing 1, 2, 3, 4 licenses or no license, or depending where you are. So it's very much a confusing world. But one thing I could talk very briefly about, I think, is going back to, and it was something we touched on very early on, was how things like COVID-19 have changed the world. And this links back to the technology conversation I had earlier, because what we've noticed is, if everybody is sitting at home and everything outside is closed, then actually what you can actually monitor for in terms of technology or in terms of activity is going to be very different from A, what was before, and B, what will happen afterwards. So it means that certain activities will be changing. So we have to start moving into a world, for example, where we'll have more digital identity, non-face-to-face onboarding. And how does that become safe? How can we use technology to really make sure that that fingerprint that I spoke about earlier is really you? and it's not anybody else. There are ways that I think the technology has advanced so far now that we can do that effectively and mitigate a lot of the risk that used to exist, even just a couple of years ago. Then if we look at some of the activities, we might say the scams have increased. We see, I know there's I think an announcement from the US government today about the risk around COVID related funds that are meant for businesses and individuals being redirected into criminal hands. So we see some of that. We see phone call scams at home, people pretending to be IT support and then getting access to your bank account and your machine and everything else, and then taking everything away. And all of these are new types of typology. We also see, for example, the ability to do things like cash muling or drug muling across borders becomes much harder because you can't go across the border. So even coming into Hong Kong, you now have to do 3 weeks quarantine. It makes it much harder to do, for those activities. So if things come by cargo because they can't be brought with an individual, then because nobody's flying, again, that makes it means that the typologies are changing towards something completely different. So we have to start looking at different activities that might be occurring in different ways. And if we go back and say, well, our transaction monitoring was looking over here, now we need to be looking over there because actually that doesn't exist, or maybe it exposed certain things that just don't seem right, like a restaurant, an alleged restaurant that might have great turnover in the middle of COVID. And you might say, well, why? So, there's those kinds of things. I think that if we pay attention to this particular period of time, that we can actually maybe uncover things that we couldn't uncover before, particularly if we use technology to help us do that.
Right.
Yeah,
right.
actually, I would like to add to that. So also, if anyone wants to read more about that, FATF issued a report on COVID-related AML activities, Q4 2020. It's an awesome report and very sweet, short and sweet. And in addition to what Malcolm said, it does create confusion. So we see lots of, for example, changes in behavioral trend, because I'm sure all of us faced that when COVID hits, we panicked. We either started withdrawing money like crazy or doing transfers like crazy, thinking it's the end of the world. We had our behavior changed. And this created lots of confusion to the AML officers and the officers dealing with that. And sometimes actions were taken harshly from financial institutions on customers, which is unfair. Sometimes it's real. And sometimes also it created confusion to the technology itself. As Malcolm mentioned, transaction monitoring wasn't used, for example, to these kind of typologies or behavioral trends. So this is also something to keep in mind to analyze now further. Sometimes the behavior might be because of panic. And there's also lots of crimes, as Malcolm outlined, related to COVID, like funding related to COVID-related things like healthcare sector, like import-export trade financing activities, which are all fake and fraud, because they know criminals became so innovative, taking advantage that we're so much distracted with COVID. We want sanitizers, we want masks, we want all of that. So there are lots of fake trade finance activities, and actually cyber crimes rise like no way before. It was, I think it's the peak at this time, specifically when it comes to as also Malcolm mentioned, phishing and smishing and vishing and sending SMS, calling you, sending emails, all of that, and then they hack your bank accounts. And also they took advantage of, for example, canceling flights during COVID. So they pretended they are the Emirates Airlines, for example, was hacked. Not what hacked, someone identity theft, Also, a police here, for example, in the UAE, we received, do you remember when we had lockdown and they used to tell us, don't leave until come back 8 p.m. And you receive, for example, an SMS saying you breached the lockdown rules and you have to pay penalty. And some people, they did breach. So they believed that. They send them a link. They say you have to pay the penalty online. So you just, and there's nothing. And everything, you're scammed, you're all of that. So also cyber crimes rise a lot. Fraud, identity theft, all of that was very much into also as part of the money laundering schemes. So the crimes like just merge together in a fascinating way.
Interesting. Very good points, Hala. In fact, there's another question for you. I think it relates to PEPs that you were addressing before. It says, I would like to go back to the point where PEPs are now defined in the regulation and distinguished between local and foreign. What are the right steps to follow by a compliance officer when onboarding such clients?
That's a very good question. And yes, the law now defined them and separated them. Foreign PEPs are PEPs which are not local. And they are, when you want to onboard them, you automatically categorize them as high risk. So don't waste your time and think whether it's medium, it's low, maybe it's like simple foreign PEP, it's automatically high risk. They made your life easier. So you categorize them high risk, you apply enhanced due diligence on them, you ask further documentations, further, like we were working on a case where we had to ask for contracts with this foreign PEP with their clients. So just to make sure who are their clients, what's the nature of their business, why transactions are coming from these countries. So you ask all of this proof of concept, and you have to update the KYC more often than other clients because they are foreign PEPs. Local PEPs, which are locals here, they are not automatically categorized as high risk unless they expose high risk. For example, if they have dealings with high-risk entities, if they own companies, which is considered high risk, if their business, majority of the business is in certain countries, which is categorized high risk. If, for example, they own companies where the shareholders are considered high risk. So then you have to analyze the remaining element. But as a local PEP, himself or herself, they are not automatically high risk until they expose high risk.
Excellent. Now, Sishan, of course, company formation is one of the activities that falls under the new law and the regulation, as well as corporate service providers. Maybe for the purpose of the viewers of this webinar, how is it that companies such as ours, in our case, or corporate service providers have to adapt? What kind of sort of changes they need to do in order to comply with the law?
So first of all, they need to understand and identify what risk they're exposed to. Then have proper policies in place so that they're able to mitigate that risk. Then an ongoing, they need to have a customer due diligence or a due diligence in place where you look at how the risk element gets involved. If it's a high risk, then have enhanced due diligence. If it's a low risk, then you can apply simplified due diligence measures. And then you need to have a compliance officer who constantly looks at these things, regulations, and updates these internal policies, regulations, and all of that within the company, and train your employees. It is a holistic kind of thing that you need to do company-wide for anyone who falls within this law. It's even for corporate service providers. But the thing that they need to do immediately, apart from setting out the policies and all that, is also register on that GoML system. And then this all needs to be done by the 31st. And it's very important because the penalties now that the authorities have mentioned, they range from 50,000 to 5 million as well. So there are about 26 violations that the ministries has made public, and it's very, 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 very important to have these taken care of and being considered while you're setting up a company or assisting anyone who is setting up a company.
Another good question, maybe for you, Sishan, sorry, maybe I'm interrupting. It says, can the owner of a company himself be the compliance officer, or does another individual or employee have to be freshly appointed as the compliance officer?
So for now, it's not set in the law that they need to have a separate one. If the law just says that they need to be having the right experience, the right qualifications, and they should be able to conduct all those policies, put in place those policies, and be able to identify any suspicious activities. If a red flag gets raised, they need to report that. So they can be the owner, partner, shareholder, can be the compliance officer themselves as well. They just need to make sure all the policies, all the measures are in place and are getting done on a very timely basis.
Sorry, just to add to that. So despite it's not mentioned clearly whether they can or cannot, but in principle, according to anti-money laundering and compliance regulations, whether international or local, the main thing when you want to hire a compliance officer is the independence. So compliance officers should be independent. I can't see the owner being independent at the same time being compliance officer. It's impossible. You know, even if I am like the most genuine person on earth, it's my company, I'll be biased, you know? So even if it doesn't state clearly, if we want to have the right independence, they should be completely different, and compliance officers should report to the board even, you know? So that's like the rules of AML compliance.
What would be, Hala, the scenario, maybe Malcolm, where a company is found to be at fault in not, presenting a case where someone is to be found doing financial crimes, and the company was, I wouldn't say protecting that information from authorities, but at least not putting it forward? What could be sort of the punishment for that?
Sorry, what will be the punishment if there is a financial crimes within the company and they didn't report it?
No, yeah, or a company that a client has a specific, a company has a client that is doing financial crimes, and the company himself has evidence that this could have been presented to the authorities, and the company did not do this.
Actually, I had very similar situation where one of the executive directors was accused of bribery and corruption in Brazil, and the company didn't declare that, but the authorities came to know because they were sanctioned. They were like listed in certain sanctions, and there was like huge penalties, and people were fired. They actually, and they were suspended for some time, like depending on when it was captured, how long did it take them to report it. So, but in general, sometimes they suspend because this is actually a huge, massive breach. You're hiding information from the authority. In the case I worked on, they were suspended for some time, and they were people were fired, were asked to leave. Specifically, the main roles: CEO, Chief Compliance Officer, Chief Financial Officer, and they paid a huge penalty.
Good. Okay. All right. Well, it's 4 p.m. here in Dubai. We're reaching the end of this session. Maybe Malcolm, what would be your final thoughts for today's session? And I'll give everybody a bit of a round to give their final thoughts. Malcolm, your final thoughts for today.
My final thoughts really, I think, would say, and what we've been saying here, is that this matters. That, you know, having a strong AML response matters, and it is good business. It is an ethical approach, and over time you will see that even if today it's slightly difficult because there's a small pain involved in cost and people and so on, as you move out over time and the world does become more regulated, and you find that you're avoiding it while maybe firms are down the road and not, then it serves you well. It's good business when you start to look at that medium-term view.
Excellent. Hala, your final thoughts?
I actually echo what Malcolm said. It does matter a lot, and I urge everyone to fight money laundering and terrorist financing, and just think like sometimes when you report or detect suspicious transactions and do this thing, you might be saving lives, because money laundering in many cases is linked to human trafficking and modern slavery and child labor. And those are much more important than the other crimes, whether drug trafficking, illegal weapon trafficking, which for me comes second, but human trafficking, modern slavery, child labor. So please fight that, because in many cases it's linked. You're saving lives.
Good. Thank you for that. Zishan, your final comments?
Same as Malcolm and Hala said, it's very important to have this done. This is becoming very important all over the world. And it's very important, not just from a corporate point of view of running a business, but from a human point of view as well. Having that humanity, that's where we all come together. So it's very important to look at those aspects. These have indirect consequences on some of these things, and it's very important to have these things taken care of at the right time, so it doesn't affect the lives of other people.
Excellent. Well, Hala, Zishan, Malcolm, thank you so much for today. To all the attendees, thank you for connecting. I'll invite all the attendees to connect with these fine speakers, find them on LinkedIn, add them on LinkedIn, engage with them if you were to want to learn more information about this topic, or if you were to need a bit of their services. From our side at Creative Zone, we're here to also help on this topic and facilitate anybody that is looking to set up businesses, relocate here to Dubai. Sishan also is part of the team that helps on this topic of AML. Hala, it's an authority on this topic, as well as Malcolm. So please do engage with us. We're going to be compiling a bit of a report on this topic and sending it out to all the attendees, together with the email addresses, if you would allow me, speakers, so that people could eventually connect with you and take this conversation further. Add us on Facebook and LinkedIn and Instagram so that you can become aware of similar webinars that we'll be doing in the future. Again, Hala, Sishan, Malcolm, we really thank you for today, and to all the attendees.
Thank you so much.
You.
Thank you, Lorenzo. Thank you. Thank you, everyone. Thank you.
Lorenzo.
Bye.
Thank
Thank
you,
you.
everyone.
Cheers. Bye.
Bye.
Bye.